Traditionally, dividend stocks have been a reliable way to generate income, but often the payouts come quarterly, leaving gaps in your cash flow. What if you could receive dividend payments every single week? By strategically building a portfolio of companies with different dividend schedules, you can create a steady stream of income that feels more like a paycheck. This approach allows you to harness the power of dividend investing and receive a more consistent flow of cash. In this video, we'll explore 8 dividend stocks that are precisely selected to create a steady stream of cash flow on a weekly basis. Be sure to stick around till the end of the video to see how these 8 dividend stocks can provide you with passive income on a weekly basis. With that being said, let's dive right in. Number 1, Altria Group. Altria Group Incorporated, recognized by its ticker symbol MO, is the first stock in our weekly cash flow portfolio. Altria is a major player in the tobacco industry, known for its popular brands such as Marlboro. The company stands out because it offers a high annual dividend yield of 7.76%. A dividend yield is the percentage of a company's stock price that it pays out in dividends each year. In Altria's case, for every share purchased, the company pays $3.92 in dividends annually. This high yield is attractive for investors looking for steady income. As of July 29, 2024, MO is priced at $50.53 per share. Altria's inclusion in our portfolio serves a specific purpose. We want to ensure regular and huge dividend income, and Altria fits this need perfectly. The tobacco industry, while facing regulatory and health challenges, has historically been stable. People continue to buy tobacco products, which helps Altria maintain consistent revenues and profits. Moreover, Altria has a long history of financial stability. The company has been around for many years and has shown resilience through various economic cycles. This stability is crucial for our portfolio as it reduces the risk of dividend cuts or stock price volatility. Number 2, Natural Health Trends. Natural Health Trends Corp is a significant addition to our portfolio due to its impressive dividend yield of 11.19%. This high yield is a standout feature, providing substantial income to investors. NHTC operates on a global scale through direct selling and e-commerce platforms. The company specializes in personal care and wellness products, a sector that has seen significant growth as more people become health conscious. This shift towards prioritizing health and wellness has created a booming market for products like skincare, supplements, and other wellness-related items, which NHTC successfully taps into. The company business model involves direct selling, where independent distributors sell products directly to consumers. This method allows NHTC to reach a wide audience and build strong customer relationships. Additionally, their e-commerce platform enables customers to purchase product online, catering to the increasing preference for online shopping. The combination of direct selling and e-commerce provides NHTC with a robust and flexible approach to the market. If you're enjoying this video, hit that like button, subscribe, and turn on notifications for more valuable content. Number 3, Physicians Realty Trust and Healthpeak Properties Inc. Physicians Realty Trust, merged with Healthpeak Properties Inc., known by its ticker symbol DOC, is a real estate investment trust that specializes in owning and managing healthcare properties. This makes it a unique and strategic addition to our portfolio. It focuses exclusively on healthcare properties. These properties include hospitals, medical offices, and outpatient facilities. The healthcare sector is known for its stability because people always need medical services regardless of economic conditions. This constant demand ensures that healthcare facilities remain in use and generate steady income for DOC. Physicians Realty Trust offers a dividend yield of 5.49%, which is slightly higher than the average on the REIT sector. The healthcare sector is not only stable but also has strong long-term growth potential. As the population ages, the demand for healthcare services is expected to increase. This trend benefits DOC as more healthcare facilities will be needed, leading to potential expansion and higher revenues for the company. Including DOC in our portfolio helps balance the risks associated with high-yield investments. While high-yield stocks can offer significant returns, they often come with higher risks. However, DOC's focus on the stable healthcare sector mitigates these risks. This makes DOC a prudent choice for risk-averse investors who seek reliable income without taking on excessive risk. DOC has a strong financial position with a track record of solid earnings and prudent management. The company carefully selects properties and manages them efficiently to ensure high occupancy rates and steady income streams. This financial stability further supports its ability to pay consistent dividends to shareholders. Number 4, Medifast. Medifast, with the ticker symbol MED, is a noteworthy addition to our portfolio. This company operates in the health and wellness sector, specifically focusing on weight management and nutrition products. It offers a range of weight management and nutrition products designed to help individuals achieve their health goals. Their product lineup includes meal replacement shakes, snacks, and dietary supplements. These products are marketed under the Optavia brand, which has gained significant popularity due to its effective weight loss programs and coaching support. Medifast boasts a dividend yield of 31.85%, which is quite impressive in the health and wellness sector. The demand for Medifast's products is driven by the growing focus on health and wellness. As more people become health conscious, the need for effective weight management and nutrition solutions has increased. Medifast has successfully tapped into this trend, attracting a loyal customer base that values its products and programs. One of the key factors behind Medifast's consistent dividend payments is its operational efficiency. The company manages its resources effectively, ensuring high-quality production and efficient distribution. Medifast's success in the market is evident from its strong financial performance. The company has reported steady revenue growth, reflecting its ability to attract and retain customers. This market success underpins its capacity to generate the profits needed to support its high dividend yield. Number 5, Euronav. Euronav is one of the largest independent tanker companies globally, specializing in the transportation and storage of crude oil. The company owns and operates a large fleet of tankers, including very large crude carriers and Suezmax vessels. These tankers are used to transport crude oil across the globe, making Euronav a critical component in the global oil supply chain. Euronav's dividend yield of 32.97% is significantly higher than the average yield in the crude oil shipping industry. A key factor behind Euronav's ability to offer such a high dividend yield is its robust fleet operations. The company manages one of the largest and most modern fleets in the industry. This extensive and well-maintained fleet ensures efficient and reliable transportation of crude oil, leading to steady revenue generation. Euronav's global presence further strengthens its market position. The company operates in key shipping routes around the world, connecting major oil-producing regions with consumer markets. This global reach allows Euronav to capitalize on international trade opportunities and maintain a stable revenue stream, regardless of regional market fluctuations. Euronav's strong market position is another reason for its high dividend yield. As one of the largest independent tanker companies, Euronav has significant bargaining power and operational flexibility. This enables the company to secure favorable contracts and optimize its shipping routes, leading to higher profitability and the ability to pay generous dividends. Number 6, Arbor Realty Trust. Arbor Realty Trust Incorporated is a notable addition to our portfolio, bringing a unique focus within the real estate sector. It primarily focuses on originating and servicing loans for multifamily and commercial properties. The company's portfolio includes various real estate loans, investment securities, and other real estate-related assets. This specialization allows ABR to cater to the specific financing needs of the multifamily and commercial real estate markets. ABR offers an impressive dividend yield of 12.7%. One of the key features of Arbor Realty Trust is its focus on high-yield, short-duration loans. These loans typically have higher interest rates compared to long-term loans, leading to higher income generation for the company. Additionally, the short-duration aspect allows ABR to frequently adjust its portfolio in response to changing market conditions, reducing the risk of interest rate fluctuations and economic downturns. ABR's strategy of focusing on high-yield, short-duration loans supports its ability to generate consistent high-income returns. This consistency aligns well with our portfolio's goal of achieving weekly cash flow. The regular income from ABR's dividends provides a reliable source of cash flow, crucial for investors who depend on their investments for steady income. Including ABR in our portfolio adds a layer of diversification within the real estate sector. While other real estate investments might focus on different types of properties or geographic regions, ABR's emphasis on multifamily and commercial loans provides exposure to a distinct segment of the market. This diversification helps spread risk and enhances the overall stability of our portfolio. Number 7. Vanek BDC Income. The Vanek BDC Income ETF, known by its ticker symbol BIZD, is a strategic addition to our investment portfolio. These companies play a crucial role in the financial ecosystem by supporting growth and development of businesses that are typically underserved by larger financial institutions. BIZD offers a substantial dividend yield of 11.17%. One of the primary benefits of investing in BIZD is gaining exposure to a niche market. The small and mid-sized business sector is often overlooked by traditional banks and is typically inaccessible to average investors. By investing in BIZD, investors can tap into the potential of this market, which offers unique growth and income opportunities. BIZD's portfolio of business development companies, or BDCs, provides a blend of income and growth opportunities. BDCs generate income by lending money to small and mid-sized businesses at higher interest rates than traditional loans. They also often take equity stakes in these companies, allowing them to benefit from the growth and success of their clients. This dual approach supports both income generation and potential capital appreciation. BDCs typically invest in areas that are not easily accessible to average investors. These include high-yield debt and private equity opportunities in small and mid-sized businesses. By investing in BIZD, individual investors can gain exposure to these companies without needing the significant capital or expertise required to invest directly in BDCs or the businesses they finance. Number 8. Vanek Mortgage. The Vanek Mortgage Rate Income ETF, known by its ticker symbol MORT, is an essential addition to our investment portfolio. It focuses on mortgage real estate investment trusts. Mortgage rates invest in mortgage-backed securities and other mortgage-related assets. These rates generate income by earning the spread between the interest income on their mortgage assets and their funding costs. Investing in MORT provides exposure to the mortgage finance sector. Mortgage rates can offer attractive returns, especially during periods of stable or declining interest rates. When interest rates are stable or falling, mortgage rates often see improved profit margins as their funding costs decrease, while the income from their mortgage assets remains steady or increases. This scenario can lead to higher dividend payouts. One of the primary reasons for including MORT in our portfolio is its ability to provide a high and consistent income stream. The substantial dividend yield of 12.13% ensures regular cash flow, which is crucial for the aim of weekly cash flow generation. This consistency is important for investors who rely on their investments to provide steady income. MORT's performance is closely tied to the overall conditions in the mortgage and interest rate markets. During periods of stable or declining interest rates, mortgage rates can capitalize on favorable financing conditions, leading to higher returns. By including MORT in your portfolio, you position yourself to benefit from these market opportunities. The payment structure. All selected stocks pay dividends quarterly. The payment periods are staggered to ensure that dividends are received every month. At least 4 stocks pay dividends each month. This setup guarantees that you receive dividend payments every week of the year. If you invest $10,000 in each of the 8 stocks, your total investment amounts to $80,000. In December or January, for example, you receive dividends from MO, NHTC, DOC, and MED. MO, with a 7.76% annual dividend yield, provides a quarterly dividend of approximately $194. NHTC, with an 11.19% annual dividend yield, results in a quarterly dividend of approximately $279.75. DOC, with a 5.49% annual dividend yield, gives a quarterly dividend of approximately $137.25. Lastly, MED, with a 31.85% annual dividend yield, results in quarterly dividend of approximately $796.25. Consequently, the total cash flow for January is approximately $1,407.25, which is received across the 4 weeks of the month. In February, different stocks pay their quarterly dividends: Euronav, ABR, BIZD, and MORT. For Euronav, a $10,000 investment with A 32.97% annual dividend yield is approximately $824.25 quarterly. ABR, with a 12.7% annual dividend yield, gives approximately $317.50 quarterly. BIZD, with an 11.17% annual dividend yield, provides approximately $279.25 quarterly. MORT, with a 12.13% annual dividend yield, results in approximately $303.25 quarterly. The total cash flow for February is approximately $1,724.25, paid throughout every week of that month. March or April sees the return of dividends from MO, NHDC, DOC, and MED, similar to January. This pattern continues for each month, with each stock paying its quarterly dividends in its respective month, ensuring a steady weekly income. Aside from the consistent weekly cash flow, there is also capital appreciation to consider. Based on the last 10 years of data, this portfolio has an average annual capital appreciation of 5%. This means that your initial $80,000 investment not only generates dividends, but also grows in value over time. For instance, a 5% annual capital appreciation on an $80,000 investment results in an increase of $4,000 by the end of the year. The key to successful dividend investing is to select stocks and ETFs that not only offer high yields, but also have strong fundamentals, reliable business models, and growth potential. By doing so, you can create a portfolio that generates consistent cash flow every week, supporting both short-term income needs and long-term wealth accumulation. Which stocks piqued your interest? Share your thoughts below in the comments section, and don't forget to like and subscribe for more valuable content. Also, feel free to watch the next video on the screen for more valuable insights. Thanks for watching.